You say that the world has gone mad and the system, meaning capitalism, is broken. You point to things like the wealth gap and the printing of money and monetary policy, unfunded liabilities. What are we going to do about it?
Well, let's first touch on what it is, okay? The necessity of trying to be stimulative when there are not other monetary policies. You can't lower interest rates anymore. There's been a lot of printing of money. And as a result of that printing of money, investors are very flush with money. And as a result, they're taking very low returns. And they also are buying dreams rather than earnings in stocks. So we've pushed that to an extreme in terms of those returns. And then at the same time, it is clogged with investors. So investors having a bunch of money. And then we also don't have much in the way of the trickling down. So we do know that we have populism of the left and populism of the right. And we're going to come into a period of time where that's going to be more challenging. And it'll have big effects on the markets because it'll have a big effect on tax policy, but it'll also have a big effect on how we are together. So if I take those things, the large populism of the extremes and the battle between those two, and then I take the absence of effective monetary policy and the conflicts that we're having in the world, that's the nature of that market. So I believe that we would need to have smart togetherness to engineer a process by which the system works better to produce more equal opportunity and also can raise the size of the pie because there are a lot of good investments in education. If we're underfunding education, or if we're doing a number of things that could produce high return on investment, we'll be better off. And so that's my basic perspective. And then also I'm pointing out that the pushing to negative rates, we're running out, and that's going to lead to fiscal and monetary coordination necessity. That is very dangerous. We're going to have large budget deficits, large debt. We're going to need to fund those liabilities that we have. We have pension liabilities and health care liabilities. That means there's going to be a lot of printing of money, and what that looks like is important. So that's what I'm saying. The system is not working efficiently, monetary and fiscal policy, and the means by which there's equal opportunities not working efficiently at a time when we have the circumstances we have.
So whose responsibility is it then to fix it? You pointed out a very scary situation here. Is it corporate America's responsibility to fix it? Is it the government? Is it individuals in this country through philanthropy? Who's going to solve this?
I think it can't be done in a fragmented way. I would say the leadership, whether it's the president or the state leaderships and governors and so on, has to take an approach where it's a come-together approach of different types of people. I'm not saying this is likely. I'm saying it's necessary because we're going to a war-like environment. And so the smart people who are in contact with various on-the-ground needs to realize that they have to engineer it together to make sure that our economy works well. Education, for example, if you look at the education statistics, we have to improve education. It's a hell of an investment. So I think that's the nature of the beast, that it has to be top-down directed. It's got to be coordinated. It's got to be nonpartisan or bipartisan. And I don't think that's likely. I think what's most likely is that as we move ahead, there'll be more printing of money that's necessary to fund those deficits. There will be bad returns because they'll be driven down, and that the dreams of selling companies that no longer, they're selling dreams, they're not selling earnings, and they're not even selling a path to earnings, that those things will have to be normalized, will have to be rectified. Time will produce a paradigm shift. There'll be a paradigm shift where those things that supported the economy and the markets in the past will increasingly be in jeopardy.
Now, in the last, few years, we've seen, obviously, on the fiscal side, tax cuts. We've seen on the monetary policy side, we're now in a lower interest rate regime. Would you recommend reversing some of those things to accomplish your goals? Do rates need to go higher from here?
No, I think the system is pretty much stuck. You can't raise rates because as a result of the stimulation, companies and various entities have a lot more debt. So it's stimulated. The borrowing and the purchases of companies back with borrowed money and all of those things have produced a stimulus. You know you can't, if you do reverse it, it will have the effect of causing prices to go down. Let's say if we reverse the tax cuts, okay, and we're looking at different proposals. The proposal to reverse the tax cut and change Elizabeth Warren's, for example, would result probably in about a 15% change in earnings. That would be a 15% change in tax, the value of stocks and earnings. So each one of those things, if you reverse them, you're going to reverse some of the things that happen, and that has enough consequences. So I think you have to engineer things carefully. I think that there's lots of good investments that can be made in some things. That we're going to need to raise taxes. But the question is how it's well engineered and whether we're doing that in a bipartisan and a nonpartisan basis. There are no simple answers because when we run out of monetary policy, we've run out of the stimulant that we usually can go to deal with that situation at the same time as there's this polarity.